Thank you for joining us now, and here are some of the stories we're filing at this time. I am Frank Komalape. Now, the Organization of Petroleum Exporting Countries has raised the crude oil production quota approved for Nigeria. OPEC increased it from 1.75 million barrels per day in May 2022 to 1.77 million barrels per day in June. OPEC had earlier raised Nigeria's oil production quota from the 1.73 million barrels per day target approved in April 2022 to a new target of 1.75 million barrels per day for May 2022, despite the country's persistent failure to meet these monthly targets. On Thursday, it maintained the upward oil production quota approvals for Nigeria at its 28th OPEC and non-OPEC ministerial meeting. The organization, in a statement made available to newsmen in Abuja, said, following the conclusion of the 28th OPEC and non-OPEC ministerial meeting held via video conference on May 5, it was noted that continuing oil market fundamentals and the consensus on the outlook pointed to a balanced market. The meeting also reiterated the critical importance of adhering to full conformity and to the compensation mechanism, taking advantage of the extension of the compensation period until the end of June 2022. And away from there now, Nigeria's federal government incurred a sum of 4.22 trillion around debt servicing in 2021, increasing by 29.3% compared to 3.27 trillion spent in the previous year. On the other hand, revenue for the period only increased marginally by 9.3% to 4.39 trillion naira. This means that Nigeria spent about 96% of its revenue on servicing debt obligations in the year under review. Compared to the previous year, Nigeria's debt service to revenue ratio increased from 81.1% in 2020 to 96% in the year under review. This is according to the analysis of data released from the Central Bank of Nigeria. Nigeria's government revenue has been constrained in recent times by the underperformance of oil revenue due to the continuous decline in the production capacity and volatility in the price of crude oil. Similarly, an analyst has enumerated the impact of Nigeria's rising debt profile on the economy. Research analyst and development economist Olawi Baboyi highlighted this on the backdrop of reports that the Nigerian government spent an estimated 4.22 trillion naira on debt servicing in 2021 alone, which is a 29.3% increase from the amount spent in 2020. He spoke earlier in the day on IBrandTV's Business Breakfast show.
The elevated debt servicing that we're experiencing at the moment is a ripple effect of elevated borrowings and as well as low revenue mobilization in the country. Now, to put a bit of picture to this, when government generates oil revenue, let's use oil revenue as an example. When government generates oil revenues, right, typically in a period where crude oil price is relatively elevated, you would expect that oil revenues will also go higher, which could reduce, the level of borrowings and as well as the level of deficit. But the picture is a bit different from Nigeria. Take, for instance, in 2020, we discovered that the gross revenue from oil that the government generated, about 32.4% of that was spent on subsidies, right? And the reason for this is because Nigeria is subsidizing. So, number one, there is a revenue problem. Number two, there is also an expenditure problem, which continues to worsen the debt servicing situation of the country. The impact is it typically limits the fiscal space, that Nigeria has, right? When you look at the fact that spending more than 90% on debt servicing, you have less than 10% to do other available things. So, which means that we continue to move around the vicious circle of higher borrowing costs, lower capital expenditure, and as well as spending more on debt servicing. So this is, has kind of created a recurring problem, which unless revenue leg is fixed and expenditure is properly managed for essential things, right, will likely continue this circle.
Well, to take us further into this discussion, Mr. DAYO LOMUAGUN is a business analyst. He joins me via the telephone now. Thank you, Mr. LOMUAGUN, for your time on Business Now. Hello, Mr. DAYO.
Yeah, good afternoon, sir.
Yeah, good afternoon. You're live on news now. Thank you for joining us.
All right, sir.
All right. I mean, research has shown that federal government spent about 96% revenue on debt servicing in 2021, holding the record for worst ever, as debt service to revenue ratio increased to 96% in the year under review. So first, let me ask you, how concerned are you? And secondly, what do you think are the implications of this on the country's economy?
So I think every right-thinking Nigerian should be concerned. Any citizen of any country that are going through what we're going through now should be very, very concerned. Because the template we're currently running is a template for that sends nation into perdition, is the template that big countries to go under. So if what is happening to Nigeria now is not arrested, if we don't get it right and check this excess is going on and check this disaster going to happen, then we just might be waiting for the day of doom.
But what if you look at it, despite the increase in the value added tax rate from 5% to 7.5% and the prices of crude, debt service obligation has continued to trend upward given the continuous borrowings of the federal government to fund its budget deficit. I mean, where does the challenge lie really?
I think it's very simple. The question is, what were we doing before that we have neglected? Or how has Nigeria been managing this economy before? Things were not this bad. Now, having asked those questions, now I think, clearly, if we increase your taxes, if we don't increase by 100%, how many people are actually paying those taxes? And if you don't widen the net to ensure that people who are within the taxable bracket, people who are eligible to pay taxes, need to pay taxes, they are brought into the tax net and your taxes are collected. It doesn't matter what rate you choose, it will still be the same story. So the point is, how many people are paying taxes and what are they paying? I mean, you go around our cities and you see big houses, big vehicles, then you ask me a question, how much are these guys paying taxes? So how effective is our tax? That's number one. The number two is, you see, you don't even need to be an economist. Individual, you run your personal account, you run your personal finance. You can't keep borrowing when you don't even you can't see your way out of those debts. I mean, why budgeting for the whole world when you know how much you can comfortably pull against, when you know that this is where your limit will reach? So why do you need to budget for all kinds of things? Is it a must to do all these things you're doing? And how much are you borrowing? And how much is actually going into judicious use? Again, you get money and you massage the ego of the rich, you massage the egos of the people in the ruling class, without any impact on the citizens. So we're saying, see, it's not about whether something that the taxes increasing, and it's about why are we getting money? Why are we borrowing money that we don't need? And even our income, where our income should be coming from. The other day they were telling us that about 90% of your crude oil is going into the hands of only God knows. So now only 10% that we can say actually gets to the right place, maybe it's processed or it's exported, only 10%. And even the little you get from the 10%, some top politicians are waiting, your leaders are waiting to squander it, they control corruption, to over budgeting, putting budget padding on all kinds of things. And at the end of the day, we keep borrowing. That the generations to come will have to pay.
Now, pardon me to just come in here. The position of the government has always been that the government borrows to fund infrastructure and again to also service its debt and take care of other obligations as well. Don't you think this position of government is justified, or do you think these reasons are not genuine enough?
You see, good reason, and I'm not saying borrowing is bad, but the point is, how much have we borrowed? How can you be using 90% of your income to pay debt. Not even the debt, to pay interest. Come on. You see, it's something really terrible happening to us in this country. If you want to borrow, how much are you making? You go to your bank, for example, no bank will borrow you money. You say, you want to borrow 100 naira. And they say, how much will you be giving every month? You say, you're not sure. You're not sure you can give more than 2 naira, 3 naira, and they will give you. Another bank will borrow you. The bank will give you that money. They're going to lend you that money because they are not seeing how you want to pay this money back. They know that after sure they are giving you that money, it is gone bad. And that is the thing with Nigeria. Now we're using about 90% of our money or whatever we're getting from revenue as revenue to service debt. Who does that? What nation does that? They survive. You see, we've got to arrest it. So go back, go and generate the money, the income you are not generating. Who are the people siphoning our oil away? Who are the people taking our oil away? And the little we get, we pull it, we say we're buying we use it to pay ransom, we use it to buy ammunition and all that. And yet you are not seeing result on any front. You are not seeing result. Whether it's the economy, whether it's security that is appointing the money, even the infrastructure. How much have we borrowed vis-a-vis what infrastructure do we see on ground? Again, what I'm saying is our corruption, the leakage is going is so massive that you wouldn't have thought about it. Nobody will have imagined this will happen in any same country. I mean, you can pardon me, but the truth is Nigeria is going on there gradually.
Okay. Let me quickly come in here because of our time.
If nothing drastic happens to correct this ill, then we can as well forget that there was a country that used to be Nigeria.
By implication, of course, this will put pressure or further pressure on our revenue generation target and further widen the deficit as well. But what do you think the implication of this will be directly on Nigerians?
Nigerians will suffer at the end of the day because of poor leadership, because of leaders that have been ceased not to know how to even get things done. This is not a rocket science. Get people who are knowledgeable in economies, who can handle the economy. Let the politicians play their politics. Let them do their politics. But get technocrats who can actually help us in this country and let us see whether they can pull us out. You see, but as long as whatever we have on ground lasts, you see, prices are going, they are hitting the roof, and whatever income, salaries are remaining wherever they are. Some states are not even paying for months, for 3, 4, 5 months. Some of them are not paying. You see, Nigeria they continue to suffer and to suffer more. And the truth is, Nigeria, God has so blessed us so much in this country that we should not even have been anywhere close to where we are now. I mean, we should have gone far, far, far. You look at your oil, go through all monitor what you have, block the leakages. This unrest that is going on, help us to address it, help us to address it, and let's see, see the kind of investment, foreign direct investment that will flow into the country. You see, these are some of the things you need to do. All the NNPC promises, for example, they are not giving us any of them. Restructure the economy. There are so many resources wasting away in almost every part of Nigeria, in almost every local government in this country.
Okay, just a moment, because of our time. Yeah.
And you have money for the sector.
Just in 30 seconds, what do you suppose is the way out of excessive borrowing for the country? Just in 30 seconds.
I think the first thing is we're going to be accountable. There should be proper accountability. You cannot be borrowing money and be looting it on the other side. And be calling in the name of budgeting, in the name of whatever. So there are going to be proper accountability. You cannot be borrowing forever. So look inward and see how you can generate money. And you can't be killing people with taxes and hiking up prices. Go to your resources. The resources are there. If there are leakages, go to the leakages. If you need to expand the resource base, let people have do restructuring. Give more power to the state to be able to tell whatever is in their state. And there will be more money at the end of the day. But to just leave those ones out of there and you are borrowing more money every time. You get to kill this country one day.
I think we should leave it there. Thank you so much, DAYO LOMUAGUN, business analyst. We appreciate you on Business Now.
Thank you so much, Amanda, always.
All right, so other stories now. The country's total direct remittances dropped by $119.4 million to $130.12 million as of January 2022 from the $249.4 $52 million as of December 2021. Figures obtained from the Central Bank of Nigeria have revealed. The development indicates a 48% increase over a period of 1 month. According to the CBN's record on weekly international payments, the countries record about $217.7 million and $51.74 million and $224.24 million in total direct remittances in November, October, and September, respectively. Direct remittances come into the country via the international money transfer operators, banks, among others. The CBN's economic report for the fourth quarter of 2021 said the emergence of and spread of the Omicron COVID-19 variant affected global economic dynamics and hampered the inflow of workers' remittances. And now the trade volume between the European Union and Nigeria has increased by 25.8% to peak at 28.7 billion euros in 2021. The European Union's import from Nigeria stood at 17.5 billion euro, while its exports were valued at 11.2 billion euros, with the trade balance at 6.4 billion euros in favor of Nigeria. The head of the European Union delegation to Nigeria and the Economic Community of West African States, Samuela Isopi, disclosed these at a press briefing on Thursday ahead of the Europe Day 2022 coming up on May 9. She said the European Union will continue to pursue with increased vigor its bilateral engagement and friendship with Nigeria to deliver better and more results in their partnership. The World Bank says Nigeria and 9 other countries account for 75% of global gas flaring. The 9 other countries include Russia, Iraq, Iran, the United States, Venezuela, Algeria, Mexico, Libya, and China. This was disclosed in the 2022 Global Gas Flaring Tracker report published on Thursday on the bank's website. According to the United States-based lender, the 10 countries also account for 50% of global oil production. 7 of the top 10 flaring countries have held this position consistently for the last 10 years. Russia, Iraq, Iran, the United States, Venezuela, Algeria, and Nigeria accordingly. The remaining 3, Mexico, Libya, and China, have shown significant flaring increases in recent years. The report further said that Nigeria and 4 others had committed to the World Bank's zero routine flaring by 2030, adding that only the U.S. has improved successively on gas flaring intensity. Nigeria made $565.5 million in crude oil and gas export sales in the first quarter of 2022, according to data from the Nigerian National Petroleum Company Limited. According to the data, the nation made $177.86 million from crude export and $387.72 million from gas feedstock to Nigeria LNG Limited, which amounted to the NNPC data indicate that in January 2022, the nation earned about $75.8 million from crude oil and $84.45 million from gas. In February, the nation earned $13.05 million from crude and $159.58 million from gas. In March, Nigeria earned about 88.9 from crude oil and 143.6 from gas as well, the NNPC said. The feedstock gas receipt was $143.69 million, which also includes receipts of $54.72 million and $21.29 million, which were expected in the previous month but slipped into the current month. Another related LNG receipt was about $7.67 million. And now Nigeria and other African countries are now faced with the urgent need to take action on cleaner energy, which offers new market opportunities valued at $27 trillion up to 2050. This comes as the African Refiners and Distributors Association, ARDA, expressed concerns over the continent's growing population, the demand for energy, and the escalating energy storage and distribution infrastructure crisis. Speaking at the 2022 ARDA virtual workshop on reducing carbon footprint of Africa's storage and distribution supply chain, The International Energy Agency and CITAC Africa also raised concerns about the growing energy demand, lack of refining capacity, inability to diversify productive capacity of the economies, and as well as the rising emissions, especially gas flaring. An expert at IEA, Tyne Hyun Kim, said Nigeria and other sub-Saharan Africa countries should provide a significant share of the world's mineral resources that are critical to clean energy technologies. According to him, the explosive growth in clean energy deployment over the next decade could create a market opportunity of $27 trillion up until 2050 for manufacturers of key equipment. There seems to be no escaping payment of higher charges and calls by mobile phone subscribers, as the federal government has approved the payment of 5% excise duty on telephone top-up cards and vouchers. The charge is part of new items on the list of goods liable for excise duty and on the country's Finance Act. Excise duty is a levy charged at the time of manufacturing. It's also a form of indirect tax on the sale of consumption of certain goods, products, services, or activities such as tobacco, alcohol, narcotics, gambling, among others, mainly to discourage their use and consumption. Nigeria's Finance Act has extended the list to include beverages and non-alcoholic drinks. According to Secular Zainab Ahmed, Minister of Finance, Budget and National Planning, has directed the Nigeria Customs Service to create a tariff line for the collection of excise duty on mobile telephones, electricity meters, and set-top boxes at 5%. The government is expected to raise at least 150 billion naira from the duty, out of which the customs will receive about $10 billion as 7% collection fee. But away from there now, Nigerian airlines have expressed disgust over a sudden increase in price of aviation fuel from 500 naira to 680 naira. A source within one of the airlines revealed that despite the resolution reached by stakeholders in March that the price of fuel would be pegged at 500 naira pending the determination of a substantive uniform price, fuel marketers have again increased the cost to 680 naira. With the newly revised price, which has already taken effect, aviation fuel now sells for 680 in Kano and it environs 650 naira in Abuja and 600 naira in Lagos and its environs. This development has caused major consternation among airlines, many of which are still recovering from the very low passenger traffic of the first quarter of the year. If you just join us, you've been watching Business Now, coming to you live from our studios here. All right, in the African scene, the government is being urged to ban the export of crude palm oil from Ghana to ensure local processors have access to raw material for their work. According to stakeholders in the crude palm industry, the current ban on the export of the products by other countries like Indonesia requires that Ghana, which is a net importer of crude palm oil, take steps to protect its local stock. Indonesia's ban on palm export, which started on April 28 to address the ongoing shortage of cooking oil in the country, if not lifted, is expected to be most punishing to sectors manufacturing consumer products in Ghana and other parts of Africa, such as cooking oil, detergent, and snacks. Because Ghana is a net importer of palm oil, any pressure from the ban will weigh in on the supply chain and drive prices up and affect availability. Available data shows that Ghana produced about 45,000 metric tons of palm oil at its peak and imported over 400,000 metric tons as of 2019 for local consumption and export of refined oil and byproducts. And now, Kenyan officials resisted the push by the International Monetary Fund to scrap the fuel subsidy program that has seen the government spend 49.16 billion shillings to stabilize the petroleum prices. Treasury Cabinet Secretary Ukru Yatani said they reached an agreement with the IMF to sustain the program to cushion the economy from a sharp rise in the cost of living as a result of a global spike in the oil prices. Kenya is on a 38-month IMF program, which has seen the multilateral lender give the country 270.2 billion shillings in loans in exchange for a reform package that includes eliminating fuel and tax subsidies to improve revenue collection. IMF staff and the Kenyan authorities reached a staff-level agreement on economic policies to conclude a third review of the program late last month. And on the foreign scene, despite the European Commission's proposed oil ban, the Russian ruble has shown extraordinary resilience, rising over 10% against the dollar and euro within a week. The Russian ruble soared to a two-year high against the dollar and the euro today. Despite decreasing interest rates twice in a short period, the ruble has maintained its upward momentum. At the time of filing the report, the ruble was trading at 65 against the dollar, indicative of an 11.34% gain within 5 trading days. The ruble also made significant gains against the euro, trading at 68%. This is indicative of an 11.11% gain within 5 trading days. And it was a sea of red in the cryptocurrency space that has seen 103,518 traders having their accounts liquidated as Bitcoin and other cryptocurrencies sell off, a day after the United States Federal Reserve handed down its policy decision to increase interest rate by half a percentage point. Liquidation refers to when an exchange forcibly closes a trader's leveraged position due to a partial or total loss of the trader's initial margin. It happens when a trader is unable to meet the margin requirement for a leveraged position, which fails to have sufficient funds to keep the trade open. Liquidation occurs in both margin and futures trading. The total liquidations from these traders amounted to a total of $403.42 million within longs, accounting for about $344.5 million, or about 85.4% of the total liquidations. The shorts account for the rest of the total amount of $58.9 million. And our stock markets in Asia and America have tumbled after the U.S. Central Bank this week announced the biggest interest rate rise in 22 years. The sell-off comes as worries intensified over how rising prices and the Federal Reserve's steps to rein them in will affect economic growth. Major share indexes in Hong Kong, mainland China, and Australia dropped on Friday. That came after shares in New York fell sharply, led by technology stocks. Hong Kong's benchmark Hang Seng Index fell by 3.8%, while shares on the Shanghai Stock Exchange were down by 2.2%. Australia's 200 closed 2.2% lower. Those falls followed the Dow Jones Index, which include big names such as Apple and Nike, sliding on Thursday by more than 1,000 points to end 3.1% lower.